Welcome. This tutorial reviews the multi-life quotation and comparison functions of LifeGuide. Please note that all figures that appear in this tutorial are accurate and current as of today, June 3rd, 2015, the date of creation of this tutorial. However, please keep in mind that life insurance companies revise their products quite frequently. So if you're looking at this tutorial days or weeks or months from now, the figures that appear would likely be different. However, the concepts and principles remain the same. The multi-life functions of LifeGuide are designed and implemented with the best interest of the insurance buyer in mind, and for situations where individual coverage for two lives is being considered. In other words, for situations where a death benefit would be payable upon the death of each life rather than just on the death of one of the lives, as is the case with joint life. Of course, LifeGuide also includes extensive and comprehensive functions and capabilities for research, quotations, and comparisons for joint first and joint last to die. However, these will be covered in a separate tutorial. The design of LifeGuide's multi-life functions incorporates maximum flexibility in terms of products and product combination and availability, as long as maximize cost savings. To that goal, LifeGuide's multi-life functions provide for consideration of intra-company as well as inter-company considerations and evaluations. By the way, by intra-company, I refer to placement of coverage on both lives with the same company, where advantage is taken of policy fee discounts as well as volume aggregation, as these may be offered by the insurance company from time to time and for different product combinations. The key, insofar as my reference to intra-company, is that both lives are placed with the same company. By inter-company, I refer to the placement of coverage on each life independently, each with a different company, in order to maximize flexibility and in order to maximize savings where appropriate. Let's take a look at how this plays out. For simplicity, we have two clients, a male. Let's just go to him here. A male, we'll call him Bill Balagan, occasional cigarette smoker, age 40, who would be rated standard or regular, as well as a female, Wilma Bilbo, whose age is 37. She's a non-smoker. She hasn't smoked for years. Let's assume that she's also standard or regular. And let's assume that, just for simplicity, we're going to be looking at $750,000 of guaranteed T100 on each of them. So here we are with Wilma here, and with Bill, the same thing. Okay, now to quote multi-life, what we do is we click on the quote button here, and we select multi-life. Since there are 12 clients in the grouping in behind here, LifeGuide questions us to select the two lives on which we want to quote for multi-life. So we will quote on Bill Balagan, and instead of Frugal Billum, we will go to client number 11 here. No, can't quote on the same client. There we go, on Wilma Bilbo. So we have Bill Balagan and Wilma Bilbo, client number 1, and the client number 11, sorry, and client number 12. We'll click on OK. Now, the screen that comes up here asks us to decide how we want to go about it. Do we want to have all quotes done on an intra-company basis, or do we want to allow inter-company basis as well? So by choosing 0 for inter-company, by default we end up with intra-company only. In other words, doing so, the LifeGuide multi-life functions will examine and evaluate 0 intercompany opportunities. So that would be totally within the same company or intra-company. However, let's put an 8 over here. And by choosing 8 intercompany evaluations per life, the LifeGuide multi-life functions will examine and evaluate the best 64 intercompany opportunities along with all available intra-company combined billing and aggregation opportunities. So let's do it this way, and let's quote. Let's proceed. And we have our quotation and survey here at the bottom, and we see Bill Balagan and Wilma Bilbo on the top. As we put the mouse over the client demographic area, we are shown the underwriting requirements for each of the clients. So here are the underwriting requirements for Bill Balagan for this case, and here they are for Wilma Bilbo. On the left side, we see the premiums that would be payable by Bill, and on the right side by Wilma. As we can see, it's T100 standard for each one of them, and these are the premiums. This is the waiver, and the total was the waiver. As we see here, since we chose to consider the intercompany combinations as well, we have the combination of Industrial Alliance and Faith Life, or if we go down here, Industrial Alliance and Western. The total would be, for the second option, let's say, it would be Industrial Alliance and Western. The total would be $12,695 annually, with Bill's portion being $8,790 and Wilma's portion being $3,905. If we took a look here, it would be $8,790 for Bill, same Industrial Alliance. However, if we place Wilma with Faith Life, hers would be $3,795. Now, if we scroll down, the first opportunity to put both of them together with the same company, in other words, the first intra-company consideration, would cost us $13,035 in total for the two, $8,790 for Bill, and $3,795 for Wilma. The difference between $13,000 and $35 a year versus $12,000, let's say $12,695, is well over $300. Multiply that by the number of years involved and add the lost cost of opportunity interest, and you're looking at substantial differences over the lives of the policies. If we just want to quote, on the other hand, let's minimize that. If we want to just quote them on an intra-company basis, we'll go for quote and multi-life. And again, we'll select the second client here. So we've got Bill and Wilma. And we will click on OK. We'll put a 0 here to restrict it to intra-company only. And we have our quote with Industrial Alliance for the two of them on top. Of course, the client is losing approximately $300 per year on this limitation. Furthermore, one of the concepts of insurance is to spread the risk. So it may very well be a good idea to spread the risk. In other words, to place with different companies. Again, each case is different, needs to be assessed by its own merits and on the basis of the individual circumstances of the client. This tutorial is to show you the capabilities. Of course, the decision is entirely up to you, and we hope that you take best advantage of these capabilities, as the capability, for instance, to quote on the basis of intercompany in addition to intra-company is available only on LifeGuide, and it's quite valuable. And it will do it for all the premium payment modes: monthly, semi-annual, quarterly. Here's the monthly, of course. Remember, this was intra-company here. We can go back, and I'll just resurrect the intercompany here, and we'll change that to monthly. Everything is instantly done for you. Okay. Thank you very much for watching. I appreciate it. And the next tutorial is coming up shortly.